I always forget to do that when she's not here. So everyone else will thank you since I promised a recording and I was gonna forget again. All right, I will go ahead and get started here. This is my fault, obviously. I apologize. Heather usually gets everything started for me, and I was in a meeting and forgot that I had to do it. So, hopefully you guys are all doing well. Anybody have anything market-wise before we jump into the slides that you guys for sure want to talk about? Anything that you're seeing in the market that is unique that you want to share? No, you guys are going to be talkative, huh? All right, well, we'll go ahead and get started. Please feel free to interrupt as we go through. I mean, as most of you know that know me, I'm always willing to talk, but I'm always happy to stop talking and let you know and get audience participation. So actually love that. So here I'm going to go ahead and share my screen. And let's see if I do a slideshow, if it gets rid of. All right, cool. Can everybody see that okay? Cool. All right, so hopefully you're here for the market update for February. Oh, that's weird. There I go playing again. Sorry, guys. I'm a mess today. All right, I guess we just get the regular arrow. Is that thing gonna stay on there the whole time? It is. All right, for those of you guys that don't know me, I've been a real estate agent since 2004. I have a real estate team. We are looking for new agents. I'm a real estate investor. I actually need to add to this slide, I do have a property management company as well. So if you have any property management needs, would love to chat about that. And then I do also do some coaching for I Love Coaching. You can follow me on Instagram and Facebook. I try to get some numbers oriented stuff up there at least once a week. So usually try to focus around interest rates, but sometimes other stuff. So looking to continue doing more of that. What we're going to be doing today is going through market trends. So we're going to talk both about the national market and local market. Talk a little bit about interest rates, just because those, as all of you probably are aware, is a pretty big driver of the market. And then we'll also talk about the best time of the year to list, what months of the year, and share some graphs on that. I did talk about it a little bit for those of you guys that were at the office meeting today. But I just think it's such an important topic. And if you take anything away, I really think that would be what I would recommend taking. As I mentioned, we'll talk about the national trends as well, because everywhere is not like Columbus. And so we'll talk about kind of what's going on nationally versus locally. And then we'll also talk quickly about showing trends, which kind of gives us a glimpse into buyer demand as well as the rental trends. So let's go ahead and jump right in. I always like to kind of give this disclaimer that all the numbers are great and helpful, especially if you're a numbers nerd like me, but ultimately you really need to understand what they mean to your clients, the buyers and sellers. Otherwise, they're really no good. They don't want to know how to that you can regurgitate the numbers. They want to know what the numbers actually mean to them in their unique situation. So it's always good, although numbers are amazing. I think one of the old school bold laws, I'm not sure if it still is, because I know they kind of tweaked that, but they say logic makes you think and emotion makes you act. So you really need to not only understand numbers, you also need to be able to understand how to attach a number to someone's emotional why in order to move the ball forward. And those two things together, in my opinion, are really difficult to stop. So that's where my passion is, and that's the reason why I do this. So, and doing this holds me accountable to making sure that I've got all of my stuff together. So, I like to start off with interest rates, have been for probably years now of doing this. And the reason is just because if there's one thing that matters most to the market, and it's proven over the last, 3 years with a lot of interest rate volatility, it is that, buyer demand and subsequent seller demand is really predicated in a big way, or driven in a big way by interest rates. And so one good thing that's happened over the last week or so is definitely the fact that interest rates have started to go back down again. Now, obviously, is this a blip in the radar, or is this, something that's here to stay? We don't really know. But for now, it is something that is a positive. So we're going to stick with it, and hopefully this trend continues. And that is this right here, right? So we're going to, see how long that lasts. Right now, a lot of this softness in interest rates has to do with a little bit of softness in the overall economy. Expectations of economists have gone from, we may not see an interest rate hike for the rest of this year, to now thinking that we may see one or two, just because the economic numbers have been a little bit less strong than they were at the beginning of the year. So that's the reason for that. I expect that here over the next week or two, and maybe even as soon as this weekend, we will begin to see an increase in buyer demand, just because interest rates have fallen a bit. And so be on the lookout for that. Can I not go forward when I'm annotating? Okay. All right. And so our average interest rate right now is right around 6.8 across the nation, according to Mortgage News Daily. I always like to share a rate sheet that I most recently got. And basically what we saw here, and this was last Friday, so locally we were about 0.5% below what the national average was towards the end of last week. I would suspect that most of our local lenders are probably closer to the 6.25, maybe even some down as low as 6. So definitely make sure you're checking with your local lender. And I would say this is a great way that you can reach out to current buyers or sellers and just kind of poke them and say, hey, did you see that, that rates went down this week? And how does that change either A, what price point you can go up to, or B, maybe somebody that put their search on hold. What I said in the office meeting today was, I would tell you that if you have been in communication with anyone over the last 1 to 2 years and you haven't talked to them in the last 2 weeks, you're missing an opportunity. Every single person that you've spoken to about real estate should be hearing from you in the next 2 days before the weekend, because if they don't, then they're going to walk into an open house with a really experienced agent. And that experienced agent is going to talk to them about these things that we're talking about today. And since they haven't heard from you in 6, 9, 12 months, even though they told you they were going to call you when they were ready to buy again, that experienced agent is going to have a conversation and move them off the fence. And they're going to say, well, that guy certainly knows more than Troy does. Or at least since Troy hasn't called me, that's what I'm assuming. And so I'm just going to go with this guy. So please, please, please do yourself a favor and don't allow an opportunity to reach out to people about the interest rates pass you by. All right, active listings. So these are the national stats. So in January, on a national basis, we are up 24%. What you're going to see is in Central Ohio, actually, we're up even more than that, actually quite a bit more. But we're still, you can see this little gray dot here is that representation. So you can see basically we're well above all pre-pandemic levels or post-pandemic levels, sorry. So the only time that we've had more inventory was pre-pandemic. So you've got 17, 19, 18, and then this was 2020. Pandemic happened, you know, in this area here. So we had a relatively normal or consistent January and February. So we're definitely nearing what would be considered a normal market. And so that's something that we're all keeping an eye on when it comes to inventory. When it comes to, boy, I am having problems here today. When it comes to, this is what I was looking for. All right, when it comes to newly listed homes, unfortunately, we're way on the low side. So obviously, if we go back here, our inventory is up 25% year over year, but it's only up 11% year over year when it comes to new listings, which as we get into pricing and different things like that, that's one of the reasons why we're still not seeing a ton of downward pressure on pricing. Now, in some areas, specifically like Texas and Florida, and I've also heard rumblings of Arizona and California are starting to see it as well. There has been a little bit of downward pressure, but not super significant from everything I'm hearing in those markets, just because the buyer demand, because of the lower seller count, we're still seeing enough buyer demand to kind of keep the market somewhat balanced and not see a downward pressure on pricing in most areas. Pending listings were actually a little bit lower. We're a touch above last year, but definitely a little bit lower
Your
than
voice got cut
2020
off, Troy.
completely. Can you hear me?
I hear you. It might be.
Yeah, I
it
can-
I
might
can
be
hear
her-
it pretty well. I can
Yeah,
hear
I've
it.
heard you the whole time.
Yeah, me too.
Okay. All right. Well, sorry. Like I said, I am recording this, and so we will get the video out here. If you want to go ahead and put your email in the chat, I can make sure that Allison sends out the recording to everybody. It also will be posted on the One Team YouTube channel within a few days as well. But if you want me to send you the link once it's up, just put your email in the chat. So yeah, so pending listings are relatively level. But obviously the new listings are pending sales are level, but the new listings are up. The other thing that's up is days on market. So you can see local or nationally, we're up about 5 days. We're also seeing that same trend locally. So again, we're still below pre-pandemic levels, but certainly we're rising, just like a lot of the other things, including inventory. Our median list price has definitely dropped. Now that, and we'll get into that when we look at the local numbers, and I'll go into a little bit more of an explanation, but basically because of the fact that we're seeing fewer buyers in the market, agents and sellers are kind of forced to price closer to the current sales price. So even though the median listing price was down 2.2%, because of the fact that that agents and clients are pricing a little bit closer to reality, we're still not seeing a huge drop in year over year pricing. However, we are starting to see signs that that could be coming, although we just haven't seen it yet. This is kind of the first leading indicator that we could see sales prices go down, because obviously the list price is what we sold it for. The question is, how much are the sellers negotiating? I don't have that number on a national level, but I do have it on a local level. And so we'll kind of see what's happening there. But we're definitely seeing a trend towards the potential for either even pricing or maybe even a decrease. We're just not there yet when it comes to sales prices, at least here locally. The number of price reduced properties is only up 1% year over year in January. But I know we're definitely seeing that trend line go up. And you're also seeing we're basically higher in terms of 30, or I'm sorry, uh, we're at what, 15% of the properties did a price reduction in January. And so that's definitely one of the higher ones. And obviously versus, just post-pandemic, like 21 and 22 were much higher. And then this is just regional stats. They used to include a lot of cooler information in here, in my opinion. But what we're seeing is the median listing price, at least, is negative now in all regions, which last year, the Midwest and the Northeast were definitely significantly better than the South and the West. And you can see that gap is kind of closing. And that's something that we anticipate happening here over the next year, is that all of the nation will probably move towards like an average, versus having some regions that are just going crazy and others that aren't. A lot of the softness in the market in the South and the West was due to the fact that they had a lot more building going on during the pandemic because so many people were living there. And so over the last couple years, even though the market had slowed down, they were working through that inventory. Now, a lot of that new construction inventory that had been still coming online last year, a lot of that is finally getting sold, especially in places like Florida and Texas. And so that's why you're going to see their numbers continue to moderate and probably be a lot closer to what we're seeing in the Midwest and Northeast. All right, so what's happening in Central Ohio? Before I move on to that, does anybody have any questions at all about the national numbers? Is everybody on here from Central Ohio, or do I have anybody else in here from other parts of the country? I don't see anyone else in here from other parts of the country this month. So, okay, well, let's jump right into what's happening in Central Ohio. So I put a little bit, just a couple bullet points in here. The things that I'm keeping an eye on, obviously, we're going to talk about seasonality. So when's the best time to list? When's the best time to buy? But I do want to also talk about pricing and what's happening with that. And then also kind of looking at the original list price versus the final sales number. That gap has been the largest that we've seen in a long time. And then also showing activity's been down. Now, what I will say is that a lot of times that's linked to interest rates. So it will be interesting being down for most of the year so far, what will happen over the next couple weeks as interest rates drop. So really quickly, we can talk about the for sale numbers this January versus last January. So our inventory here in Central Ohio is actually up 40%, which I think the national was 25%. So we're significantly more growth. However, I would say that our market still remains stronger than the average market in the US. We did see listing growth of 6.5% year over year, which was lower than it was for most of the year last year. But solds were down 6%. So we added 6% more homes and we sold 6% fewer homes. So that's a 12% difference. So if we continue on this trend, we expect to continue to see inventory rise as we go through 2025. So we'll see if that actually happens. I think a huge factor in that is going to be the interest rates. So sorry, I lost my train of thought there for a second. When we talk about seasonality, definitely this graph shows it to some extent. The next one I'm going to go into and look at Dublin really quick, just because I think it shows this is obviously your average, which are a little bit less chaotic. But I think the suburban school district seller is a really good conversation to kind of lock down and know. But in general, when we talk about seasonality of the market, we see that we have the lowest number of new listings in December, which I think all of us would probably guess to be the case. This, which is the blue line here all the way throughout the chart. The red line are the number of pendings. I like to call the pendings number a a really good representation of buyer demand, right? So if there's no buyers in the market, there's going to be fewer homes that are put into contract. The other thing that can impact pendings are the number of listings available. But in general, I say the blue line represents the sellers entering the market. The red line represents buyers entering the market or going into contract, right? And so what we see is that buyer demand ticks up throughout the spring and then starts to level off in May, April or May. But listings actually don't peak until May or June. It depends on a lot of that. It just kind of goes back and forth each year, but we're usually either peaking with new listings in May or June. And then this isn't as pronounced on when we look at all of Central Ohio, but you can see how there was a drop in June and then a little bit of a bump in July. When we go look at Dublin, you'll see there was an even bigger jump, but there's usually a bump in new listings in either July or August. And I always joke that those are the sellers that saw what their neighbor's house sold for in April and decided to list, but they couldn't actually get their house ready for sale until July. And so they've kind of missed the market. And the reason why they missed the market is because starting in June, now the number of buyers in the market have already started decreasing. So you can see how the number of buyers here dips in July, but the number of listings increases. And then you usually get a bump either in September or October. Some of that has been driven over the last couple of years by interest rates. Some of that is also driven by weather. A lot of times, if we have a warmer than average fall, you might have some people that will stick to their plan and list in fall, versus if you have a colder than average fall, some people that were gonna list in the fall actually decide to wait until after the new year to list. If we look at Dublin, I think it gives us an even more drastic representation of what's happening. So you can see that, and this is last year, I think it was single family homes and condos in Dublin School District. So you see that same kind of general trend, but you see how the buyer curve is just going straight up starting in February. And then in March, you have a little bit of a dip. Now, Dublin last year, probably because we have 10% market share and you guys already knew this, but Dublin actually was smart. A lot more listings in April than in May. So they were able to kind of take advantage of the rising tides of buyers. And therefore, Dublin did okay. But a lot of times what happens is you'll see the buyer demand really drop off here, but then you have a spike. Like I said, it's either July or August usually. But look at the difference here between those. Like if you take the bottom of the trough here to the top of the peak here, I mean, there's a significant gap between seller listings and buyer demand. Now, what happens after that? So you can see when these two get close together, the following month, there were actually more sales than there are active listings on the market. When you see a big gap like this, what you see is that month and the following months, the difference between the solds, which are the dark green lines, and the actives, which are the light green lines, it grows larger, meaning there's more houses on the market than are selling. And so obviously these two lines being the same equals 1 month of inventory, which is still a great market and typically a strong seller's market. But you can see how what impact that has on future months. And so what all of this means is that if you're a seller, the best time to list your house is when buyer demand is increasing, but the new listings haven't come on the market yet. So in my opinion, based on the data, the best time to list your house all year long is mid-February to mid-April. Once you get to mid-April and into May, you're usually competing with all of these sellers. Now, even though we do have good buyer demand during that time, you also have the most competition of any time in the market. And so what you'll see is that things tend to trail off. And then in June, especially if you're in a suburban school district, if you haven't put your house on the market by the third weekend in June, you've missed the market. After the third weekend in June, we get 4th of July, which very little activity happens. And then if you go 30 days from there, you're at early August, and then 1 or 2 weeks of possession, people can't move in before school starts. And therefore your buyer demand drops off. And then what happens is everybody goes on vacation in July. See this drop in pendings. And then once they come back from vacation and start school, then they start going like looking for houses again, and some of them go into contract, others drop off and wait until next spring. But this is kind of that trend. So I'm going to stop there because I feel like I talked a lot right there. Does that all make sense? Do you guys have questions on that? That was like kind of a big theme that I wanted to make sure I got across today.
Totally
You can-
makes sense. And I feel
Okay.
good that I've been on these meetings because I've got a new listing tomorrow, active. So you're
All
giving me
right.
a pep in the you're giving me a pep in the step here because I'm like, okay, I told the sellers this was the time. Heritage, Hilliard, Heritage Lakes.
Nice. Yep, that's good. So yeah, this is it. And this is, and obviously for those of you that are in our office at consultants, you can obviously, you can pull trend graphics for any zip code or any city or any school district that has, and kind of get granular. You can do different price ranges. You can do single family only or condo only. But you can pull this for their specific area. And I think if you just learn how to have this conversation alone, that it puts you in a league of your own compared to most listing agents. And so a lot of times we know that 75% of buyers and sellers only interview one agent. And so your job in that appointment is to make them feel like you've got them covered. And I think this is a great way to show that you understand the market and then explain what it means to them. And it really sets you apart. Even if they are interviewing more than one person, I think this is something most agents aren't doing. I would also use this with the buyers. Obviously, you can flip it around, right? So if buyers are looking for a needle in a haystack, May and June is probably the best place to be looking because you're going to have the most homes on the market. If you're looking for a house, not say that you want to discourage your buyers, but if you're looking for a house in March, and getting frustrated, you can say like, well, historically, coming up in April and May and June, those are when the most number of homes are going to come on the market. So I was just talking to a seller a week ago, and they're also buyers, and they have the ability to move twice. And I talked to them about this, and they said, okay, awesome. We're going to list our house in March. If we can find something, great. But if we can't find something, we're going to move in with our parents for a little bit, and then we're going to buy here when there's still a lot to choose from, but there's less competition. Or at least the ratio of buyers to sellers is a lot better than in March or April. So kind of that's the way you get the best of both worlds. So. All right. We talked about these numbers here. This is resale and new construction split up. I always like to kind of look at both. Obviously, new construction is only including stuff that gets put in the MLS. So actually resale inventory is up even more. It's up over 50%. New listings, pretty similar, 6.7%. So, just some food for thought there. And I think the moral of this story as we move into these numbers, that's resale only, is we need to be pricing better, right? Because the market is more competitive. And this isn't true in all areas, but it's certainly true across the broad market. So, if you pull the numbers for the specific area and every house that's in contract was only on the market for 3 days, don't go in and tell them that their house is going to be on the market for 38 days. What we're looking at here, though, is the national trend is up for days on market, and so is our local trend. And so we need to be cognizant of that as we're pricing homes. Now, remember, this is based on sold inventory. And so what sold in January went into contract in November, or December in most cases. So, you know, again, this is representing what happened in the slowest time of the year. The one thing I do want to point out, though, is that we absolutely need to be paying attention to this. So if you look back here at 15 months, 97, a blip of 96 in January last year, but then kind of went up, right? Now we're down to 95. Hopefully it's that same blip in the radar, but we don't know for sure. But we've been kind of consistently lower than last year. And so if your client has to come off their price by 5% of their sales price, you know, that's fairly significant. And so you need to be talking about this number and make sure that they're comfortable with that and that they understand that. And I would say it's probably a good rule of thumb right now to take where you think it should sell and maybe go a tad lower. And be paying close attention to showing time and what the showing activity is in the different markets as well. So months of supply, again, another example of the fact that we are kind of in the slowest market, I guess, would be the best way we can put it, of the last year and a half. So the first time that we've been on the resale side of things above 2 months of inventory. So even though we're still technically in a seller's market, there are definitely areas that certainly don't feel that way, right? Where there's houses that have been sitting on the market for sometimes months. We're definitely seeing some expireds now. So it'll be interesting to see what happens as we move into the springtime, especially if interest rates go down. I think if interest rates go down, things are going to pick up pretty significantly. But right now, based on the sold data, it's definitely slower than what we've been seeing historically. So make sure you're not over promising and then having to under deliver. But you can see here the trend line on pricing. We kind of were in a pretty steady downward trend, which is pretty normal after things peak in May. Usually they peak in May or June. Last year, that was the exact same price in May and June. And then we kind of do a slow march down to sometime around January or February, and then things spike back up. You can see that the slope of this line actually decreased last month. And so that's something that we definitely want to keep an eye on. But we are still holding on to a 2.8% average increase in Columbus. So that's another good number. I think my prediction, which I don't have a slide for this, but my prediction is that we're probably going to see somewhere between 2 and 5% within Columbus on an average for this year in terms of an increase. And I think that's going to be largely driven by what interest rates do. If we stay in the upper sixes, it's probably going to be closer to that 2%, could be even 1%. I would be surprised if we saw price declines. But I think different areas it could possibly, it's definitely a possibility in some areas. Everything's local, right, in terms of pricing and demand. So yeah, this is something that I've been paying a lot of attention to, because you can see that this gap between the sales price and list price has been shrinking up until last month. And what that means is that sellers and agents were getting more realistic with their pricing on the front end. But then, like we showed in that earlier graph, you know, the difference between original list price and sales price was larger than it's been in a long time. So that's something that we're keeping an eye on. All right, this is just a chart that shows showing demand. So the number of showings each month, and that versus interest rates. So you can see down here what the different colors represent. We've got showings in 2025, again, below where we were last year. And then interest rates, though, have been pretty flat, although they've been flat on the higher end. This graph we started doing last year, it hasn't really shown as much of the inverse relationship that I was expecting. You can see it kind of started to happen at the end of last year as interest rates bumped up, the showings went down, but there's also seasonality that comes into play there. So it's kind of a cool graph, but I haven't seen like an exact correlation kind of like I expected. This is the one that I really like. And this is another one that I would put in your packet when you talk to sellers, if they need even more backup on why to list now versus waiting. And the one thing that you can kind of see here is that obviously the Easter weekend is a low point when it comes to demand in the spring, but one weekend on either side of Easter, which it's usually the weekend after Easter, has been the highest number of showings of the whole year. So in 2022, it was the weekend before, and then in 23 and 24, it was the weekend after. But either way, so said another way, after Easter, it's all downhill from there until the end of the year. So that just shows that buyer demand peaks in that April timeframe. And so realistically, if you list past Easter, you're kind of playing catch up. And you can see that the number of showings just continually declines as we get further and further into the year. And now that we have 3 full years of data, and looking at our 4th here, you can see that they all kind of trend almost exactly the same, which is a little bit wild how consumer behavior is so predictable. But this is one that I would definitely. So the moral of the story is do not list the week of Easter, but before or after are both solid choices. And last but not least, Columbus, along with the rest of the country, after seeing some pretty good rent growth during COVID, has definitely leveled out. And you can see that the month over month change is the same as the year over year change. That's not really what you want to see. That basically means that it's flat. And so what does this mean to you? If I'm an investor, it's hard to cash flow. Unless you're putting, more than 20% down at today's interest rates. So this is what the average rent price looked like last year throughout the year. You can see that we saw a little bit of a bump in September and October, and then it kind of went right back to 1,500, and it's stayed there so far this year, all the way. And this is fresh data, so it was updated the 24th. So what this says is that I do expect to see some rent growth this year in Columbus as wages continue to increase and the price of everything else, even though inflation isn't back where the Fed wants it at 2%, but 3% is a lot better than 9%, which is where we were before. And so I expect that they'll start using some of their wage growth in order and be willing to pay more in rent. The other thing that we're taking into account here is this is all home types. So this includes apartments. And basically what happened during the pandemic is that we started a bunch of apartment projects that are just now finishing, both in 2023 and certainly last year. And so I expect that the majority of those big projects that we started during COVID, which are coming online with 300 or 400 units in a soft rental environment, those big companies will lower rent as much as it takes in order to just fill up the building. And so those have had kind of a downward pressure on rental rates. I anticipate that those projects finishing up are going to kind of increase the amount of the demand that's still staying in the market, and we should see some of these prices, that's a prediction, obviously, start to go up here as we move through 2025. So that's my prediction. All right, that is going to be it. I've got some source data here at the end, but what questions does everybody have? Does anybody have questions, comments? Anything I didn't cover that you would like to see me cover next month, or that you just have questions on?
I had a question, not, I don't know if it covers this stuff or not, but like on projecting values, I use if like AVM and RPR. Sometimes it looks really good to like compared to what I've done my homework with, and then sometimes it's just way off. Like, I don't know if you use those, or do you feel like it's
Yeah, I
just a
mean,
decent
I
source?
think they're a good check, like you're saying. I really don't depend on them in any way. I
Yeah.
usually use kind of my experience to, but you know, sometimes you just need to get that baseline feel, right?
Yeah.
I would still always put as much emphasis as possible on the neighborhood itself. I think, you know, in an area such as like in Clintonville, for example, where the neighborhoods aren't as obvious, if you don't know the area, you know, do a larger area and then look for, you know, go into the map view and look for trends. So click on, you know, I like to click on the solds that happened in the immediate area. And if I see one that looks off, I'm going to dig into why is that off? Was it a condition conversation? Is it a location difference, right? Was it on a busy road? Did it back to power lines? I think those are the things. I think right now, from a pricing perspective, the biggest things that agents are getting caught on is condition, because the days of just being able to throw a listing on, no matter how dirty it is or not updated, buyers will let it sit. You know, they'll let it sit and they'll allow, you know, they'll allow it to sit, and then they'll come back and they'll expect a discount. If you overprice it, they'll let it sit. You know, you still might get showings, but you might not get offers right away. And as soon as a buyer doesn't have competition, they are putting the screws to you. Like, they think it's 2011 again if there's only one offer. They want it all. And I mean, if your seller has the guts to stick it out, usually you can still win as a seller. But you have to be willing to kind of put it on the line, and buyers will walk away, especially at today's rate. So, because as soon as it doesn't sell right away, like all the rest of them, what do they think? What am I missing that everybody else is seeing? Why hasn't anybody else bought this house? And so that's where you really, I think too, you have to pay attention to actives. So that's the other thing that, again, for the last 5 years, we really haven't had to deal with. But if you go in and pull comps and there's 4 actives in a neighborhood that have all been on the market for more than a week, boy, you better be right on your pricing, because that means that the market is not buying there. Like one house sitting for 160 days, but all the pendings are 3 days on market, like you're good, right? Like just something wrong with that house or overpriced or whatever. But if you go in and there's 4 active listings in a neighborhood that have all been on the market for more than a week, you're telling, my recommendation is you tell the seller, like, look, we're going to try at this price. This is what the comps say, but know that we might have to be reducing, because if you're on the market with multiple people, you have to be the best value in order to be the next sale. So the conversation is either you're willing to wait, or we're going to have to be the best value, I should say. So best price, or yeah, best price and condition combination.
I have a quick
Right?
question, if that's okay.
Yeah.
Sorry, I don't have my video on. I just just got home, but I caught Teresa saying a couple times in the meeting and when you were speaking, find the perfect price and then go a little bit below. Is that a tactic you recommend? And then how much below is she talking?
Yeah. And that's a great question and a hard answer. I think I would gauge. So one thing that I think we all make mistakes on, and I fall into it still sometimes, and yet this is always the way I get around that, is by asking the first question needs to be, if I had to put in order ease and quickness versus the best price, which one would be more important to you, Mr. and Mrs. Seller?
Okay, okay.
And if they say that, like for example, let's say they have 5 kids and they live in a small house, they have 5 kids and 2 dogs. If that's the situation of the seller, $5,000 or $10,000 may not be worth dealing with showings for 2 weeks because they overpriced it. And the other thing is that oftentimes they're not going to get that $5,000 or $10,000 anyways, because once they're on the market for a week, then they don't. Now
Oh,
the only caveat to that statement, and I know Teresa's coming from the right place, but the caveat to that statement is, if you go into the neighborhood and there's 3 pendings or more that have all been on the market for less than a week,
uh-huh.
you have a lot more flexibility in pricing.
Right, okay.
Right.
Got it.
But if you go on there, and then the other thing I would look at too, like let's just use Dublin as an example. If I'm pricing a house that's at 450 or 500, I'm going to pull up Dublin schools and look at everything that's between 400 and 600. And if I see 30 pendings and 2 actives, then I'm good.
Okay,
But if
yeah.
I see 30 actives and 5 pendings, then I would say you need to start comparing your house to all the other actives that are in the price bracket that you think you're going to be in, and make sure that you're the best condition and the best price, which is usually, in order to do what I just said, the last part, you're probably going to have to be a little bit less than what you would say an appraisal would bring you.
Okay. Thank you.
Yeah, absolutely. We could have a whole nother class on pricing for sure. There's a million different, different variables depending on what the market looks like. But in general, I would say more actives than pendings. You need to be, especially this time of year, you need to be really careful about pricing. And if you're not confident, like the cool thing, I just got pulled into Teresa's office a little bit ago with somebody who just was like, hey, I need 5 minutes of your time. I want to know an opinion. Like, what are you thinking? Here's these are the facts. Super unique house. And I certainly don't know all the answers by any means, but you walk up to any experienced agent that's been doing it for a while, and they'll at least have some pointers. And that's one of the best parts about being in our office, is that there's an opportunity for that. So don't throw something on the market and just hope, without at least talking to somebody else. And obviously you're on a great team, so I'm sure that they help with that too. But just if you're an individual agent, don't feel like you can't. I know there's a bunch of people on this call right now that would be more than happy to have a quick conversation with you. So
Great. Great, thank you.
yeah, absolutely. What else? I have a few more minutes in my calendar for this, if you guys have any comments or questions. If not, we can let everybody go.
Troy,
Kendra?
and
Oh,
this
go ahead.
doesn't have to be part of this class right now, but if I could get like a couple minutes of your time, my old office, we didn't have trend graphics.
Okay.
I don't really know how to use it. So if
Okay.
I could
Yep.
like just get just a couple minutes with you.
Yep. I will stop by. I'm
Savvy,
5 feet away.
I'll get it. I'll get it right
But
away.
I will tell everybody, so the login is on kwcresources.com, and then there also is on YouTube somewhere. I taught a couple classes, and unfortunately Trend Graphics hasn't changed in a really long time. So if you guys ever can't get a hold of me, there are training classes out there on YouTube. But I'm happy. It's pretty easy. I think I can spend a couple minutes with you and you'll get it.
Thank you.
Yeah. Kendra, I was going to pick on you just because you're always good for a good question, but I don't know if your camera being off means you're not available.
No, I'm here. I was just gonna say, I had a bear of a listing this past weekend, but it was really helpful based on what Andrea was just saying. I pulled the reports in Trend Graphics to actually show them the last like 2 months data on 600, 700, and 800 price ranges and what the showing cadence was to give them like a vote of confidence for, you know, you're gonna sell but just having that trend graphics and the showing times reports has really put me ahead in front of my sellers at appointments.
Cool. That's good. Yeah, that was the only other thing, Rachel, I think it was Rachel, right? That I didn't mention is showing time report. There's a way that you can go in because the inventory is still relatively limited and kind of see what the showing activity was like in an area over the last couple weeks. And that's something that I'm always pulling. So when I go on a listing appointment, I usually give them a range, and based on what I see in the house, I'm kind of narrowing that range typically. But I always tell them, you know, usually we're a month or two out most of the time. And I always tell them, but even if it's just a week, I'm going to go redo all of that stuff like the day before we go live on the MLS. And what I want to see is in their neighborhood or in Dublin between 6 and 800,000 or 7 and 8, depending on where we're listing, like what was the showing activity last week and the week before in that specific price range. And so usually there's at least one listing that came on and I can see, did it go into contract? And if so, did it have 30 showings or 2 showings?
Okay, that's great.
And so that's also going to inform you, you know, if you have 5 actives and the house that went on the market last week only had 3 showings, that's a problem, right? So you need to set your sellers up. You don't want them to go pay $500 for a hotel room and then only have 2 showings. But there's also areas like Riverside Green. We had a listing a couple weeks ago and had 30 showings plus 20 people through the open house. So, you know, all of that stuff are just things that I think help you look like an expert and also help your sellers have confidence in the fact that you know what you're doing.
Right.
So cool. Any last minute questions, parting words?
I wanted just to make sure that you got my email. I dropped it down in the chat.
It should be. Yep, it is definitely in here.
Yeah, because I want to make sure I can get a copy of it.
I don't think Allison, you know what? I'm gonna put my email in here. I've got Kelly's and Melinda, but I'm gonna put my email in here. Would you guys be able to do me a favor, because Allison's not on here, and email me? And then that way I can make sure that she sends that to you.
Absolutely. Thanks, Troy.
Absolutely. All right, cool. Well, you guys have an amazing rest of your day. Great weekend. I'll leave it on here for a second so you guys can go check out my email. And then when you email me, if you want to be included on the calendar invite moving forward for this, feel free to let me know that as well, and I can get you added.
I would definitely want to be included if you could. I appreciate it.
All right. Sounds good. Well, you guys have a great rest of your day, and I'll see you next month.
Thanks, Troy.
Thank you.
Bye-bye.
Have a
guys.
good one. Bye.